Imagine waking up one morning, checking your phone, and seeing that a metal you barely thought about has just crossed $100 an ounce. Not gold, not platinum, silver. The same silver sitting in your grandmother's jewelry box, the same metal used in your phone, your solar panels, your medical equipment. Silver just did something it has never done in all of recorded human history. And most people completely missed it. If you're interested in money, finance, or changing your financial future, like this video and subscribe right now, because what you are about to learn can change the way you see money forever. So here is the thing that nobody is talking about at the dinner table. Nobody's posting about this on their Instagram. Your coworker who talks endlessly about the stock market probably has no idea this is even happening. While the whole world was distracted by tech stocks, crypto crashes, and political chaos, silver quietly went on the most explosive run in modern financial history. It surged over 144% in a single year. 144%. If you had put in $1,000, you would have been sitting on over $2,400. And we are going to talk about exactly why this happened, who saw it coming, who missed it, and most importantly, what it means for regular people like you and me going forward. But first, I need to tell you something that will probably make you a little uncomfortable. Because the reason most people miss this has nothing to do with silver itself. It has everything to do with how most of us are taught to think about money. Think about your life for a second. You go to school, you get a job, you get paid, you spend, you save a little, you hope things work out. That is the financial plan that most people follow. And there's nothing wrong with working hard, but there is a dangerous gap in that plan, and that gap is this. Nobody teaches us how money actually behaves. Nobody teaches us that money, the paper in your pocket, the number in your bank account, is always in a slow race against time. And whenever the world gets a little uncertain, a little unstable, money starts losing that race faster. And that is exactly the world we are living in right now. But here is the uncomfortable truth that most people do not want to face. The people who quietly got wealthy over the last 12 months were not necessarily smarter than you. They were not born rich, they were not lucky. They just understood one simple thing that we are about to break down together in this video. And once you see it, you cannot unsee it. Let me take you back to the beginning of 2025. Silver was trading at around $30 an ounce. $30? Not exciting, not glamorous. For years, silver had been sitting in the background like a forgotten instrument in a band. Always there, never getting the spotlight. Gold was the star. Tech stocks were the rock stars. Silver was just kind of there. And then something started to shift, something that most everyday investors completely overlooked because it was happening beneath the surface, in the places most people never look. The first thing you need to understand is what silver actually is, because most people think of it as just a shiny metal you make jewelry from. But that is only a tiny piece of the story. Silver is what scientists and engineers call a critical industrial material. It is used in solar panels to collect electricity from the sun. It is inside every single smartphone on the planet. It is in electric vehicles. It is in medical equipment, water purification systems, and the satellites spinning above our heads right now. In fact, industrial use of silver accounts for nearly 60% of all global silver demand every single year. Think about that. More than half the silver mined on Earth gets consumed. Not stored, not traded, consumed by factories, manufacturers, and tech companies. And the world is building more solar panels, more electric cars, more smartphones than ever before in history. Now, here's where the story gets really interesting, and I want you to hold this thought because I'm going to come back to it in a moment. The world has been using more silver than it produces for 5 straight years in a row. 5 consecutive years of what experts call a supply deficit. That means the world is eating into its silver savings like a person who makes $2,000 a month but spends $2,500. So you can do that for a while. You have some savings to cushion the gap. But at some point, the math catches up to you, and in 2025, the math caught up. Most people never realize this part, because when you look at silver on the surface, it just looks like a price on a screen going up and down randomly. What you cannot see is the invisible tug of war happening beneath that price every single day. On one side, you have industries desperately needing silver to make the products that power the modern world. On the other side, you have miners who simply cannot dig it out of the ground fast enough. And sitting above all of that, you have governments, central banks, and investors all becoming more nervous about the future at exactly the same time. Let me explain that nervousness because it matters a lot. In 2025, the United States government ran a deficit of $1.8 trillion. That means the government spent $1.8 trillion more than it collected in taxes. The national debt climbed to a record high of $38.6 trillion. Now those are big, almost impossible to imagine numbers, but here is what they mean in plain language for you and me. When a government borrows and spends money at that scale, it puts pressure on the value of its currency. The dollar starts to feel less trustworthy, not just to Americans, but to the rest of the world. And when the dollar feels shaky, people have historically done one thing. They run to hard assets, gold, silver. things you can hold in your hand that governments cannot print. And this is where everything changes. Because at the exact same moment that industrial demand for silver was exploding and supply was shrinking, you had millions of investors around the world all waking up to the same realization at the same time. Silver was cheap, historically embarrassingly cheap. Here is one of the most powerful signals in all of precious metals investing, a number called the gold to silver ratio. It simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, that ratio averages around 70 to 1. In April of 2025, that ratio hit 105 to 1. 105 ounces of silver to buy 1 ounce of gold. That is like walking into a car dealership and seeing a Toyota that costs 1/5 the price of a similar BMW. You do not need to be a financial genius to figure out which one represents better value. And this is where the story of the regular person becomes so powerful, because you did not need to be a Wall Street analyst to see this. You did not need a Bloomberg terminal or a finance degree. The information was there. The signal was screaming. But most people, regular salary workers, middle-class families, students figuring out their finances, were not looking in the right direction. They were staring at tech stocks and crypto, while silver sat there quietly, coiled like a spring. But what happened next changed everything, and I mean everything. China made a move that sent shockwaves through global markets. China is the world's second largest exporter of silver. In late 2025, the Chinese government announced export restrictions on silver, limiting how many companies could actually ship silver out of the country starting in 2026. Think about what that means for a second. Imagine you and your city depend on one main road to get your food supply. Now imagine someone announces they are closing that road. Even the fear of that announcement alone is enough to send food prices skyrocketing. That is exactly what happened with silver. Investors looked at the supply chain and thought, if China tightens its silver exports and the world is already in a deficit, where is the silver going to come from? And that fear turned into action. Prices began to climb. Now, here is something most people do not realize about fear and markets. When fear and reality line up at the same time, markets do not just go up a little. They can move in ways that seem almost impossible to believe from the outside. In 2025 alone, silver went from around $30 an ounce to over $70 by year end. And then in January 2026, it crossed $100 for the first time in history, touching a peak of $121 an ounce. Let that sink in. $121 for something that most people had completely forgotten about. Think about the kind of people who were quietly watching this happen. Not billionaires in boardrooms, ordinary people, a teacher who had been putting a small amount into silver every single month, a delivery driver who read about the gold to silver ratio and decided to take a modest position, a young college student who inherited her grandmother's small collection of silver coins and suddenly realized they were worth several times what anyone expected. These are the kinds of people that financial transformations are built for. Not the people with the most money, but the people who are paying attention at the right time. And nobody talks about this part. The financial media spends almost all of its time talking about the same 10 or 20 stocks. The big tech companies, the hot new IPO, the latest crypto coin. But the quiet, powerful moves in the commodities markets, in oil and copper and silver, those get almost no coverage until the price has already run. By the time it is on the front page of every financial news site, most of the big move is already done. This is not a conspiracy. It is just how attention works. And it is why most regular people always feel like they arrived at the party after everyone else already left. But here is the thing. And this is the part I want you to really sit with. We are still in the middle of this story. The reason this silver move happened was not random. It was not a fluke. It was the result of forces that have been building for years, and most of those forces are not going away. Let me walk you through them one by one. First, the supply problem is real and structural. The silver market has run a deficit, meaning more silver was demanded than produced, for 5 consecutive years. Mining is a slow, expensive, complicated business. You cannot just decide to double silver production and have it happen next month. It takes years and billions of dollars to open a new mine. So even as prices rise, the supply response is slow. The world is running low on the easily accessible silver reserves, and the gap between what the world needs and what gets mined is not closing anytime soon. Second, industrial demand is not slowing down. Every single solar panel installed on a rooftop or in a solar farm contains silver. Not a little silver, a meaningful amount. And the world is building solar infrastructure at a pace never seen before in history. The International Energy Agency has been reporting record solar installations year after year. The electric vehicle revolution adds to this demand. AI data centers, which are multiplying globally, require enormous amounts of electronic components that use silver. The clean energy transition that every major country in the world is pushing, it runs on silver. This is not a trend that fades in a year or two. This is a decade-long industrial shift that keeps consuming silver regardless of what the price does. Third, the monetary environment changed. In late 2025, the Federal Reserve began cutting interest rates again. This is a crucial detail. When interest rates are high, investors can park their money in savings accounts and bonds and earn decent returns. They do not need to hold gold or silver because their cash is working for them. But when rates fall, the math changes. Suddenly, holding precious metals becomes more attractive because the opportunity cost, the thing you give up by not holding cash, decreases. Lower rates, more money looking for a home, more investors turning to hard assets like silver. This dynamic is likely to continue through 2026. Fourth, and this one is more psychological but just as real, trust in traditional systems is eroding. This is not a political statement. This is just an observation. More and more people, across different countries, different income levels, different backgrounds, are quietly losing confidence in governments, central banks, and financial systems to protect their purchasing power. When that happens, historically, people move toward tangible real assets. Gold and silver have served as stores of value for thousands of years, long before any central bank existed, long before any fiat currency was invented. They are not going away. Now, I want to be completely honest with you here because a good friend tells you the truth, not just what you want to hear. The silver story is not without risk. After hitting that peak of $121 in January 2026, prices pulled back sharply. By February, silver had dropped back to around $77, a 32% drop in just a few weeks. That kind of volatility is real. It is scary, and it is something you need to understand before you ever put a single dollar into any investment. Silver is not a smooth, predictable ride. It is more like a roller coaster than an elevator. History shows that silver has sometimes crashed by 70 to 90% after a major rally. This happened in 2011. The same fundamental drivers existed, prices ran up, and then they collapsed hard. So what does that mean for you? It means that understanding why something moves is just as important as knowing that it moved. It means that investing is never about chasing the last big winner. It is about understanding the underlying forces and making thoughtful, considered decisions. If you are someone who cannot emotionally handle watching your investment drop 30% in a month without panicking and selling, then the full weight of silver is probably not for you. But here's the key insight. Understanding these markets, even if you never personally invest $1 in silver, makes you a more financially aware, more resilient person. Because the same forces driving silver are telling you something about the broader financial world you live in. Here is a reality shock moment for you. Most people will go through 2025 and 2026 and have no idea what happened in the silver market. They will not know that a metal used in their solar panels and smartphones went up over 140%. They will not know that a 5-year supply deficit finally met a perfect storm of investor fear, geopolitical risk, and falling interest rates. They will not connect that to what it means about inflation, about the dollar, about the direction of the global economy. And because they do not know these things, they will make financial decisions, or fail to make them, in a vacuum. They will wonder why their savings keep buying less and less without ever understanding the mechanism behind it. This is exactly what financial education is for. Not to make you a day trader or a commodities speculator, but to give you a map of the world so you can navigate it better. Knowledge is not just power in some abstract sense. In finance, knowledge is literally the difference between building wealth and watching it quietly disappear. Let me tell you about a concept that every smart investor understands, but almost nobody in school ever teaches. It is called the hedge. A hedge is simply something you own that goes up when other things go down. When the stock market crashes, when the dollar weakens, when inflation eats into your purchasing power, a hedge protects you. Gold and silver have historically served this function. They are not magic. They are not guaranteed to always go up. But across hundreds of years of economic history, across empires rising and falling, across currencies being created and destroyed, the metals have retained their value in a way that paper promises never have. Now, this does not mean you should run out and put everything you have into silver. Diversification, spreading your money across different types of assets, is one of the most well-proven principles of investing. Think of it like this. You would never build a house with only one type of material. You use wood, concrete, glass, insulation, different materials that each serve a different purpose. A strong financial life is built the same way. Some savings in cash for emergencies, some investments in stocks for long-term growth, some exposure to hard assets like gold or silver for protection, some investment in your own skills and earning power. No single thing carries the whole weight. But here's the deeper point I want you to understand before this video ends. The silver spike of 2025 and 2026 is not really about silver. It is a symptom. It is the financial equivalent of a fever. Your body's signal that something is off. When precious metals spike dramatically, when investors rush toward hard assets, When the gold to silver ratio goes to extremes, these are all signals that something in the underlying economic system is creating fear. And that fear has a message. The message is that the purchasing power of regular money is under threat, that the systems people rely on to protect their savings are not as reliable as they appear, that the financial world is shifting in ways that reward the people who pay attention and punish the people who stay asleep. This is not doom and gloom. This is reality, and reality is actually empowering if you understand it. Because if you know the signals, if you understand what is happening and why, then you are not a victim of the economy. You are a navigator within it. You can make different choices than the people around you who are still operating on autopilot. Think about the ordinary people who quietly benefited from this move. They did not need to be wealthy to get started. Silver is one of the most accessible investments in the world. You can buy a single ounce of physical silver for less than the cost of a night out. You can buy fractional amounts through ETFs, exchange-traded funds, which are basically like buying a share of a silver holding without needing to physically store it yourself. The barrier to entry is low. The information needed to understand the basic fundamentals is not complicated. What it requires is curiosity, attention, and the willingness to think about your financial life differently. And this is where I want you to honestly ask yourself a question. Not a rhetorical one, a real one. Where are you right now with money? Not in terms of how much you have, but in terms of how much you understand. Can you explain what happens to your savings when inflation is running at 4 or 5%? Can you explain what a supply deficit means for an asset's price? Can you explain why falling interest rates tend to push up the price of gold and silver? If not, that is not a failure. That is just a gap. And gaps can be closed, but only if you are aware they exist. The most dangerous financial state a person can be in is confident ignorance. Thinking you know enough because you have a savings account and a pension plan and things seem to be going okay. The financial landscape has changed dramatically. The old rules, save money in the bank, trust the system, work until 65. Those rules were written for a different economic world. The world we are living in now requires a higher level of financial awareness. Not panic, not paranoia, just awareness. Here is something I want to leave you with. A small shift in understanding can compound over time in ways you cannot imagine today. The person who understands what money really is, how it behaves, what makes it strong or weak, what assets exist to protect it, that person will make slightly better decisions year after year. Slightly better choices about what to own, what to avoid, when to act, when to wait. And those slightly better decisions, over 10 or 20 years, create dramatically different outcomes. The difference between financial stress and financial freedom is rarely one big decision. It is almost always 1,000 small ones, made by someone who was paying attention. Silver exploded. Most people missed it. Some people who understood the fundamentals, who watched the signals, who understood the gap between supply and demand, who paid attention to what the gold to silver ratio was saying, those people were rewarded. And the next opportunity like this is already forming somewhere. In some market, on some asset, in some corner of the financial world that most people are not looking at yet. The question is whether you will be the person who notices it, or the person who reads about it after the fact, and wonders how everyone else seemed to know. The answer to that question is not about luck. It is not about being born into the right family or having the right connections. It is about making the decision right now to become someone who is financially aware, someone who reads, watches, learns, and applies, someone who treats their financial life not as something that just happens to them, but as something they actively shape. That decision is yours, and every single day you delay it is a day the world moves without you. If you learned something new today, make sure to subscribe to Money Insights and like this video. More powerful financial truths are coming next.